Hi everyone, it's Grayson here. I hope you are doing alright. So today we are gonna talk about the 7 financial rules that you cannot break. Number 6 is very important, so make sure you stay until the end of the video. Click the like and subscribe button before we begin. So let's get into the video. So the first financial rules that you can't break is never borrow money to invest. Because you have to realize those capitals that you borrow from banks or from your creditor to invest in your investments, they come with a interest rate, which means now you have two debts. One is from your initial investments, and the second one is from your debts from your creditors, which come with an interest rate. So let's say very unfortunately your investments didn't go well. So you have two debts to pay if the investment didn't go well. One is you have to you have to lay off the debt on your investments. And the second one, you also have to repay your creditor, which is the debt you borrowed plus interest rate. So it's a very risky thing for you to do. Unless you are buying real estate, for example. But that's another topic for another day, which is I have to do a whole series about real estate. But for stocks or for any common investments, I will never agrees or never recommends you to borrow money either from banks or from other creditors to invest in stocks or any common regular investments. And the second financial rules that you cannot break is never try to get rich quick. I've talked about this many times in many of my videos, which is there's no shortcut in investments. In investments, you do need patience, you do need research, you do need the emotional control of yourself in order to get your investments or financial goals. There's no shortcut because you do need time to have the time to let your money to work the compounding interest to your investments. If you want excitement or if you want the adrenaline to your investments, you might as well take your money to bet on casino in Las Vegas or in Genting, Malaysia, because investments, there's no shortcuts obviously, and you can't get the excitement as you wish or as you imagine in your investments. Because if you want investments to really works for you, you have to let it to roll like a snowball that rolling down the snow hill, like I mentioned in the last videos. So don't try to get rich quick, don't join some multi-level marketings or some money games, which sounds really silly nowadays. A lot of bitcoins and forex going on. I strongly recommend you to against and never touch those things because it's not historically proven. So stick with the fundamentally strong assets like stocks, bonds, etc. and never try to get rich quick. Let the time work the magic of compounding interest to you. And the third financial rules, and it is one of the most asked questions from my subscribers, from my friends, which is when is the good time to invest? Well, the best time to invest is now. No, I'm not trying to predict the market or predict the future of the financials world, but I'm just trying to say that in investments, there's no one in this likely world can predict when exactly is the bull market and when exactly is the bear market. The best thing as we can do is we trying to get in the market as quick as possible. Then we can learn from the mistakes or we can gain from the rewards as early as possible. Because in investments, you do need time to learn, you do need time to adapt the financials and the emotionals changes in your mind or in the external factors. So the best time to invest is now, because you do need time to learn from your lessons. And second, the earlier you invest, the longer the compounding interest will work for you, and which means the bigger rewards with the time going on. And that's why I always tell my clients or with my friends when they ask me when's the good time to invest, I would say now, because we don't know when exactly is the next bear market or the next bull market. So might as well we start early, and if we buy in a very high price and the market go bearish, we can still cost averaging it. So it's not really a big deal. Like if you buy high and suddenly the market bear or it crash, very unfortunately, there's still things we can do. So don't try to time the market. Try to get early in the market as early as possible, and we will adapt from there. And the fourth financial rules is always try to keep track of your spending and keep your budgeting tight. Because in the end of the day, if you want money to invest, you have to have the money first, right? So it's very important for you to keep your expenses as low as possible and keep your income as high as possible. One thing that I realized in my age group is people spend a lot and they focus a lot on the entertainment and a lot of the luxurious thing. People, the main problem in my age group nowadays, I see that is they focus too much on now. They don't think of what happened 5 years later, 10 years later, how the world will change, how the financial industries will change, how the financials, their personal finance will change, and how they're gonna improve it. They don't look at that. Instead, they look at what I want, what will keep me happy today, tomorrow. So sometimes when it's spent, you have to think, is it really necessary? Or there's any ways that I can spend the same amount of money but with much more value. So always keep track of your spending, keep your budgeting.
And the fifth financial rules that we cannot break is we never chase the trend. Instead, we try to create or even predict the trend before it happened. For example, this COVID-19 pandemic, many healthcare and many consumer stocks went up. In fact, one of the company that I'm holding is a Malaysian glove company. It's called Harta Lega. It went up to 165%. So it's very hard for us to chase the return while it's going up. So what we can do is we do massive research and massive focus on the macro and micro economy, and we try to predict what's gonna happen in the near future. For example, what we are focused as human now, we focus on 5G. We focus on the AI, artificial intelligence, and the blockchain technology. Maybe we can try to create these trends, or we try to predict what is gonna happen in this field, so we can be the first that gain the rewards. So again, never chase the return while it's going up because it's already too late anyway. So instead, we try to create the trend, or either we try to predict the trend before it happened. And financial rules number 6, which perhaps is the most important one, is always do your research and due diligence before making any investments or financial decision. For example, if you want to invest in unit trusts or mutual funds, you have to know what stocks are these funds is holding and how's their historically performance and returns. An example, if you want to invest in the stocks, you have to know how's their historically earning of the company, who's the management of the company, and how's the stock's price is doing. Is it too high or is it too low? So again, it's very crucial for you to do your own investments research and due diligence before you make any decisions. And financial rules number 7 is never let your emotion play a role in your decision making. For example, like last year trade war, which caused a lot of stock volatility in the market. And this year pandemic stock crisis as well. It's very easy to let your emotions, fear, or even greed to play a role in your decisions making stage. But you always have to remember, you have to stick with the fundamentals, which is what is really happening in the market right now. Don't let your imaginations or emotions to play too much role when you are doing a crucial decisions. So again, stick with what is really happening now and stick with your fundamentals.
So all this might sound very theoretical and not very practical to implement, but trust me, I've learned these 7 financial rules from the very hard way, especially from the last year crisis and the this year COVID-19 pandemic stock market crisis. So I hope you always remember these 7 financial rules and always plan before you execute any investments or financial decisions, and also do your research and due diligence, and most importantly, have to diversify your portfolio. So I hope you get value in this video, so click the like and subscribe button before you go, and as always, stay safe and see you guys in the next video. Take care.